The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, we're on here at AbleTrend. Thanks for being here at the webinar. We'll go over the different signals and charts and show you the right way to use the software as far as where to buy, sell, put your stop loss, and the no trade zones. We always use a guidance chart, which is the combination of two time frames combined into one chart. That's what makes it work well and gives us a big advantage. It'll work the same whether you trade stocks or futures or Forex. It'll work the same whether you're a day trader, swing trader, or even a longer term trader, just as well. It doesn't favor anything. It works well for everything. It just depends on whatever you like to trade, or clients all around the world just use it for whatever they like to trade the best. What's real popular here in the U.S. and what most people ask us about is the E-mini S&P for day trading, or the E-mini NASDAQ. One of those two, any one of the E-minis is very popular for day trading because you don't have to put up that much money and you can trade all day long without any kind of penalty or anything like that. It works really well for that. Just as well, you can use it for swing trading, stocks, great for option tradings. This is my favorite is 120-minute and a daily, which is a 2-hour and a daily. Well, a daily is 6.5 hours. Remember, this is for stocks only. Stocks are indices, ETFs, but the stock market only, which is only open 6.5 hours a day. So that's why we use a 2-hour and a 6.5 hour, because we like about a 3-to-1 ratio as far as the two time frames together. So we use a 120 and a daily, and on the daily chart we use AbleTrend 3. Otherwise, for all intraday charts we use AbleTrend TS, and every lower time frame of the two. Every lower time frame of the two, we always use AbleTrend TS on both time frames. If it's intraday, if it's like 120 daily or daily weekly or weekly monthly, because weekly monthly works well too. You get to look at the big picture. You know, some people don't like to trade that often, and maybe just a couple times a year, especially for retirement accounts. It works great for that. But again, you'd always use AbleTrend TS on the lower time frame. And again, when using daily, weekly, monthly, use AbleTrend 3 on the upper time frame, on the higher time frame. It's a faster indicator because we're a little more than 3-to-1 ratio. The higher time frame is 4 or 5 times. You know, there's 5 trading days in a week. So we got to quicken up that higher time frame indicator, and that's why we use AbleTrend 3. Let's jump in and take a look. We're going to look at two charts here today. It's always the same colors and same dots. It's always the same rules. It's always the same rules, and that's important because once you know the rules, where to get in and out on one chart, you apply those exact same rules to every chart, and that's why it's simple to use once you know how to use it, and it's really quite simple. But of course, there's little nuances to everything, and that's what I go over in the live one-on-one trading session with you, and I do that with every trial client. You definitely want to get your money's worth out of the trial, as I would, as anybody wants to get their money's worth out of anything that they pay for. So we offer the live one-on-one trading session. It takes about 15 minutes whenever you're available, and you wouldn't get your money's worth out of a 1-month trial until you did that. And I'm here to help, so might as well take advantage of it. I certainly would if somebody wanted to help me with a software program that I just got. So let's jump in and take a look. This is great for swing trading, again, especially option trading, or you can trade shares too, of course. We're taking a look at Alta right now, good stock for option trading. It has a lot of movement to it. And we're just looking for the combination of the 3 indicators and 2 different time frames agreeing before we make a trade. That greatly lowers the risk and puts the odds in our favor, stacks the odds greatly in our favor. So it lowers risk and puts the odds in our favor when we have 3 indicators aligned together. We do not take a trade unless they're aligned together. It's as simple as that. Either they are aligned together and we trade, otherwise it's no trade. We were looking for a red bar a red small dot, which is right there. It's hard to see it, but it's there. And then the red big dot. The bigger dot is the higher time frame. In this case, is the daily chart. This is a 120 daily, great for swing trading stocks and ETFs and indices. So we would get in at the close of that first red bar, because once it closes, it will never, ever change colors again. Down and away it goes. There's only 2 exit signals. Well, actually, there's 3. We can use the 3 green bar exit, which is fine. It's we're protecting our profits and getting in and out a little bit more quicker, if that's your style. Or, of course, if it goes above the red dots, we don't like that, because these red dots block the prices from going lower. The red dots is the hidden, like you can see right here, blocked it 3 or 4 times there, blocked it again from going lower. Look how the price shoots up, hits the dot, and it stops, like you just walked into a wall. Blue dots is support, blocks it from going lower, like right there, 4 or 5 times here. Now, when it goes under the dot and it goes to the previous lower blue dot, we'd be stopped out. That's where we put the stop losses. We start the stop loss here, actually, in this trade, at the bottom of that first blue bar, blue big dot, blue small dot. The arrow is a 4th indicator. It doesn't have to agree, just a little extra indicator that we've added to the chart. It's a 4th indicator using a different algorithm, and when that agrees, well, that just gives us more confidence and more confirmation that that trade is going to go higher. So we would short it over here at the close of the red bar. We put our stop loss on the top of the red bar, down and away it went until right here. There's your 3rd green bar. If you're using the faster strategy to get out, 3rd green bar right here, you'd be getting out at 255 after shorting it or buying puts at 290. That's only 1 week, by the way. Each one of these black lines is the new day. That's only like 6 days later. Picked up 35 points. 45 points. Wow, that's a lot of money. Then you can get short again here. That's a perfect sweet spot right there. Perfect sweet spot right there. Because you're right near the red dot. That's what a sweet spot is. When you're right near the red dot, small red bar, small red dot, big red dot, there's the triple confirmation we need to make a trade. Down and away it goes again. And there's your 3rd green bar. Again, if you're using the 3rd green bar, that's optional to use the 3rd green bar exit. It's more for getting in and out quicker. Most people like it because 3 green bars kind of means that, trend's getting a little weak. But as you can see, that was a tremendous downtrend. It was a very big win trade. This is a no trade zone. We never buy if there's a red dot above, or even if it's over here, because you see these dots come in at the open of every day. So even if the dot is there from the open, that's still good until the next day. So that's a no trade zone. Any red or blue mix, no trade. Again, we have to have 3. You got a blue bar. At the little blue dot, you don't have the big blue dot underneath. No trade. Now, some charts use an X. So if you see an X, it's the same thing as the big blue dot. You can use whatever you like. There's that combination we're looking for. Blue bar. The first time all 3 indicators come together, that's when you make the trade at the finish of that bar or the open of the next bar. Blue bar, blue small dot, blue big dot. There's the first time they all came together. You don't want to be getting in up here. You just lost out on 20, 30 points. It's already made a big move. Too late. There's where you want to get in on when that first happens. Now, there's your 3rd green bar, and that's about a break even. However, oh my God, that's just a perfect sweet spot. That's a textbook sweet spot. Blue bar, blue small dot, right near the small blue dot, blue big dot. There's where your stop loss goes. Previous lower small blue dot below the price. This one's slightly low. It's got very little bit of money at risk, like 3 points. That's a really, really good risk-reward ratio because that is a super low-risk trade. Extremely low risk. Anthony's asking, do I use the Bolly bands on the swing and day trades? I don't put them on. I don't even put them on the intraday trades. But that's okay. But we like to normally use them to give you a guide if you're trading a lot of money and it's a good place to exit. We even get in, on the first blue bar, blue big dot, blue small dot. Same thing with the red dots. Regardless of the bands, when those 3 indicators come in, we are in. Period. It's the sweet spots. It's the the trades in between that you certainly don't want to start your trade on the bands, but those are good places to take profits. It's just personal preference, the bands. Personal preference on that part. And you certainly can use those. Some people find them very helpful. I do too. But that's really more for traders trading, a lot of money, and it's more for profit taking. But when you have the combination of all three indicators, man, just jump right in, because that's usually a powerful signal. Not going to be right every time. I'll guarantee you'll be losing trades. But wow, I mean, you got just look at this trade here. You're in at 245 right here, and you stopped out right there. It went under those blue dots, and it went to the lower blue dot right there. That's only a week later at 272. That's a nice piece of change right there. That's like $30 a share. Get right back in again right there. There's your sweet spot, and that's about a break even because we're stopped out there. And once you're stopped out, again, you can valid to get right back in again on the sweet spots. And we're still in that trade from 7 trading days ago. We would have entered here right about 282 at the close of that bar. We're still in it today at 287, up about almost 288. So up about $6 on this particular trade. And it's the same rules, same colors and dots, same everything for whatever you like to trade. Stop loss would be right there right now. Never had 3 green bars, never broke under the blue dots, certainly never had a red bar. Because if any one of those things come about, we're out. Okay, we'll go to a swing trading stock chart to a very messy E-mini S&P chart this morning. Then it got a little bit better as the afternoon went on, but real messy in the morning. And let's take a look at it, because that's going to happen. Really, there's a no trade zone. Looks like right there is a triple confirmation trade right there. That was a nice little trade, because there's your third green bar exit, and that popped up about 4 points. That's $400. That's $200. I like the ES this year. Last year, the NQ was great, just fantastic. This year, I'm finding the ES from January 1st. That's why I've been showing this chart. Although NQ was fine too. NQ was perfectly fine. But the ES seems to be a tad smoother. So I'm kind of sticking with the ES. And this one went up 4 points right away. That worked out well. Got a sweet spot to re-enter right there. Maybe a point. Let's even call it break even. It was a point. We'll call it break even. Obvious no trade zone. You can get short right here. I mean, that's a valid trade. Now, stop loss goes on the top of the red bar, but we were out way before that with about maybe a 1 point loss on the third green bar. There's a valid sweet spot right there. There's your third green bar. Not even a point, but I'll call it a point loss right there. There's the first time all 3 indicators agree right there. Another break-even trade right there. It was real choppy, as you can see. However, in a really choppy, and I mean, that's an ugly chart right there. That's ugly price action. We can't control that, nor can anyone else. But for some really ugly price action, anyone very strictly following the rules actually made a little bit of money this morning. And the first 3 hours of trading is 65% of our profit. The final 35% comes in the final 2 hours. That doesn't mean you can't have a trade in that 12:30 to 2 o'clock Eastern time, time zone, but just keep in mind it's generally a little sideways and choppy during that period. But after some really difficult price action, as you can clearly see, that's why we've got these rules, these low risk rules in place to keep our risk down, keep the losses small, and take advantage of the trends, or especially taking advantage when the 2 time frames and the 3 indicators agree. When is that? You got that first blue bar, blue small dot, blue big dot, and in this case you even had the blue arrow, which just gives you a little bit more of a push to make that trade. Okay, where do we have it over here? Going short, we've got that right there. That's the first time the 3 indicators agree right there. And then again, you got the third green bar right there. I'll pick up a point. Now, for anybody who not everybody uses the three green bar exit. Anybody who didn't actually hit a home run on this trade, this thing dropped like 7 or 8 points before we'd be out there. But I like to use the three green bar exit because it is a lot more in and out, and everybody's different. If that's your style, it just shortens up the losses, gets you in and out a little quicker. But at the same time, it's not for everybody because it's a lot of in and out trading. Oh, Mike wants to look at the 11-12 trade. Yep, I wouldn't pass on that one, Mike, because it's the first red bar, red dot, big dot, and little dot. It's the first time you had the triple confirmation, and we would have lost a point on that trade. So got to be fair about that. Michael's got a question here. Fresh buy-sell signal on the 1-3 during a trend reversal. For example, the ES at 2 o'clock. Okay, I didn't get up to 2 o'clock yet, so I'll take a look at that in a minute. So as you can see here, there are a bunch of, it was a really nice downtrend on this right over here, just a super downtrend because you had big dots and small dots. Go by the dots. Your trend goes by the dots, especially the small dots. You've got everything in place. Sweet. I mean, we had a nice little trade there early this morning, then a bunch of choppiness, and we've got a really nice little trade section right over here. Obvious no trade zone. We're going to go short there. Here's your third green bar exit. Lost a point. Let's even call it 2 points. Let's look over here, right in that 2 o'clock. Again, looking at the whole trade here. Nothing but blue dots. Again, look at the dots more than the price bars. The dots are more important than the price bars. Of course, the color of the bar is important, but notice the dots. Blocked it from going low. Blocked it from going low. Did it again here. Every time it would hit those dots, it would just bounce back off of it. So there's your first time you've got everything in agreement, but you got to be careful because sometimes this 3 minute. Remember, the 1 minute bars close after 1 minute. The dots don't close until after 3 minutes because it's a 3 minute price bar. So it's going to stay open for a lot longer time. So anywhere in here, you've got your triple confirmation right in there. Any one of those trades are valid trades. Now, a bunch of times you had the 3 green bars, so you'd have taken a couple spots there. You'd have taken about a 1 point loss. But I mean, right there, you got some nice little sweet spots in there. Any one of those are valid. And there's your third green bar. Pick up a point or two right there. It was a little bit it was a little bit, even though in the context of a big uptrend because you had nothing but blue dots below. Anyone using the three green bar exit, meaning you're going to get in and out very quickly, you're not going to pick up big winners, but you're not going to pick up big losses. Now, everybody has a different style, and AbleTrend can help everybody no matter what your style is. So if that's your style, in and out quick, that'll work just fine. Again, smaller losses, smaller gains, and some people like that better. A little bit more risk, meaning stay in the trades as long as the blue dots are below, but bigger winners. So it just depends on whatever fits your style better. Not real sure what your question is, Michael. I don't have a grip on what you're saying there. They find that the signal wavers the original 3 minute dot, can flip back to the opposite color. Can't wait 3 minutes for the 3 minute dot to print. Now, you've got to wait for the 3 minute dot to print. I mean, otherwise it can flip because it's not final. It has to be final. Sometimes, yeah. I mean, you can't. Sometimes you can't pick it all it up. You're right, Anthony. Today was one of the rare days that there was a nice little trade. Actually during a kind of the 12:30 to 2 o'clock dead period. You had a nice little area in there. Yeah, you made a little bit of money at the end of the day, and you did have that trade at the opening that I showed you. It was 4 points. So, who knows? Every day's different. Yeah, gotta just take advantage of everything you can. Michael saying to keep risk per trade, but what are your thoughts about tick charts? Yeah, if you're using NinjaTrader, tick charts are fine. 233 and a 950 tick, yeah, that'll work. It's a lot of in and out. I mean, it's a lot. I mean, you're going to trade your brains out, but you know what? Looks good. I mean, if you like tick charts, that'd be fine. Mike says he had a couple of long bars go against you with the 3-minute dots when the 3-minute dots flip to blue. Yeah, well, the really long bars, not a big fan of those, but you can't pick and choose. Either we take them all or we don't. So that's the hard part. The long bars, you're right about that. The longer the bar, like the first bar when you get, actually the longer of any bar. Here's a really long bar right there. Now, what happens with a long bar is everybody's piling in at the same time, and it sometimes pulls back or goes sideways or even pulls back here for that. So the long bars, not a real big fan of those. I totally agree on that. The long bars can be a little tricky because if it's the first long, remember we get in on all the first, triple confirmation trades. But if you got a really long bar, I can certainly totally understand skipping that one because of the usual pullback when you get a very long, unusually long bar. Yes, I totally agree with that. And sometimes they could be a lot risky too. Usually the long bars are like about 10 points on the NQ, generally about 10, 12 points on the NQ, and 4 or 5 points on the ES. But the long bars are definitely tricky and definitely ones to avoid. Totally agree. And when I say, well, a lot of people see, then you have to define to 20,000 clients, what's a long bar? It's kind of a little bit subjective, but like what I do is I look at all the previous bars before it, and if this is one of, if not the longest bar or one of the longest bars in, say, the previous 20 or 30 bars, then that's one you want to avoid. Totally agree with that. Yeah, the long bars are the tough ones. Anthony has a good suggestion. Using the ATR average greater than 2.5, meaning greater than 2.5, no good. Yeah, it's a good suggestion. Thanks, Anthony. To get the ATR on the chart, we just click Format Analysis, and you can add ATR right here if you like. Click Add, and click OK. That's a topic for another discussion. Jesse's a real big expert on the ATR, and what that means is when the ATR is at a higher number, it just means there's more volatility in the market. There's definitely a lot more volatility. Here would be a good example of what Anthony was saying, where he would not take this first long blue bar here because the ATR is above 2.5. In fact, even above 2 would be considered quite large. But 2.5 for sure would be, and this one was 2.5 at that point. Yeah, it was just about 2.5. So yeah, that's a good one. I like that, Anthony. Good point. Thanks for your help on that. Thanks for that suggestion. You can see over here. No, everywhere the rest of the day actually it was not above 2.5. No, actually wasn't even above 2. So, but good stuff. Good suggestion. We're always looking for an edge in any possible way. Okay, got to run here. Wow, it's 26 minutes after. 1 period on top of 14 period. Oh, great suggestion. Thanks. You're welcome. Michael, what I'm trying to say is when trying to enter trade, when the trend changes with the 3-minute dots on I see the M in dot changing colors. So you're going to trade when the dot's in my favor, then flips back. The only thing you can do about that, Michael, is to that can happen, as we obviously know, because it's still in print. The only thing you can do is just wait it out, and if it runs away from you, then you wait for the sweet spot. That's the safe way to do that. That's the only safe way because there's no other way. It's either yes it is, or either it prints or it doesn't. And before it prints, of course, it's, the algorithm is doing the calculations, and the prices and the prices are going up and down. The safest way is to just wait until it closes. There's just no other way. You're welcome, Michael and James and Paul and Anthony and everybody else. Thanks everyone for being here, and feel free to call, email, anything I can do for you. I'll be here to help anytime. Good night, everyone.